Hi, John. How are you?
Okay, how about you, Basil?
I'm very well, thank you. You would
Good.
like to look at?
The SPY and the DIA.
All right, SPY and the DIA.
Yes,
What?
I got in yesterday, and it's lower than what I have now, what it is now.
Okay, so wait, you went long yesterday?
Yes.
Which one, the diamonds or the SPY?
The both.
Okay, so what time did you get in?
Oh, well, it was kind of high when I got in.
Okay, so you got in after the
I got in
morning.
around the diamond is around 243 and change, and SPY was around 266 and change.
Okay, so the SPY was 266 and change. Okay, so it's now down at 261.96. Well, let me do this. So was this a trade or was this a position play that you thought that we're going to go higher for maybe a couple of weeks? Or
is this a position trade, a short term?
So okay, if it's a short-term trade, let me do this. So you're down about 4.5%, maybe 5% right now. So I'm going to say to you, I think from everything I'm looking at, the selling pressure is kind of done for now, based on my, I'm just going to show you in the Tiger TV. I'm going to show that I've got a leg C in the 10-minute chart of the E-mini in the Chapman wave, a leg C in the 5-minute. So this suggests that a chunk of the selling right now has been done, and probably you got end of the month buying coming in. So this is what I'm going to recommend to you. At least on a half a position that you've got right now, the SPY is trading at 262. I would make, let's see, it opened at 260 and the low was 258. So I'm going to say to you, on the position, if I had done that, and I actually did get in for my subscribers yesterday, but we had a pretty tight stop, and it actually ran even higher after we got in. But I was remiss in the diamonds in the Dow saying if it rallies after you're in, usually I say raise the stop to the entry price, and for some reason I forgot to put it in, so we took a little bit of a loss. But now what I'm looking at is I think that this is a rally that could have some legs, at least as I'm looking at it right now. So it's a 262.25 on the SPY. I would at least make part of my position. I put a stop in of 260.10, and I'd let that position ride, and I'd just have like a trading stop and let it rally. And if by the end of the day, it's hard to say, but let's just say at the end of the day, instead of reversing back down, which is done for so many days lately, it actually rallies. That means that I would then say I'd make the one part of my position that I said was a stop now of 262, I'd raise that, and I'd have the entire position have a stop of 262 in the SPY. If you want to hold on, I'll talk to you about the diamonds. Do you want to hold on?
Okay, yes.
Okay, great. Folks, we're on with John. We're looking at the SPY. Hi, everyone, Basil Chapman. So we're on with John in Bethesda, Maryland, and we're looking at the SPY, which is the S&P Spider ETF, 500 ETF, trading at 261.41. So, John, this is what I'm really looking at. The MACD, the movie in the daily chart, the MACD is very weak. Yesterday was the opportunity for the SPY to tackle the 9-period moving average of 265s and to actually try to hold and close near there, and today to follow through. There are many readings that are saying that the market is oversold in a certain context, but if I'm looking at one of the techniques that I like to use is how does the stochastic rally from the teens back over 20% to give you a really good torque, a kind of a buildup of power so that it can continue higher. And the stochastic's at 15%. I'm very nervous about that because it's using up oversold conditions but not responding the way it should. So that's why I'm saying to you, I wouldn't want to risk. You know, you got a 5% position, maybe a 5% loss right now. But if in fact, there isn't a buying spree later on, and all of a sudden this thing goes down below 260, goes into 259s, yes, it could be making the arch formation of a lowercase h, and by tomorrow there could be a sudden kicker that says, wow, now it's going to accelerate right into early next week. But that's a lot of ifs. So I'm just saying, to protect your money part of the money management, I would have a stop on some of my position. And that position, I'd probably say I'd have half off if at any point today it goes to 260. Hey, it might go to 259. And this afternoon, suddenly there's a buying spree. And tomorrow you're looking at 265. And you say, oh, man, why did I do that? But my question here is, are you prepared? Because you've got two positions in similar indices. Are you prepared to see this go to 258 and then 257? And if it's a trade, I suspect you're not, because that's not what you were expecting. You were expecting today to be at least 1.5 or 2 points in the money, correct?
Correct.
So I always like to see, I've got a philosophy that I've had for a couple of years now. I do this with my subscribers as well. And I say, you know what? If I'm wrong, I'm done. I'm out. I can always come back. I can make up 5% in a relatively short while. 12%, it just psychologically starts to get harder. So I'm saying to you, I would try to manage the trade with stops. I wouldn't be looking at how high will it go. I'm looking at how low will it go, because even now the S&P is only up 5. The S&P after yesterday's drubbing, S&P should be up more, and the QQQ, which is my focus as saying it's an intermediate term sell mode in both the daily and the monthly, it's dragging on the indices. So it might take a couple of days before maybe the Dow or the S&P can free themselves from the drag of the Qs. So I'm saying to you, for the diamonds, let me just go to the diamonds right now.
Could you recap the SPY again? Where should I put the stops again?
Okay, so the SPY, I would have a stop at least on part of my position at 259.98. Forget the round number, 260. Let's see if we, give it 2 cents below that.
Uh-huh.
And that's a stop. Personally, I would make it on the whole thing. But if you want, you can do it on half your position. And let's just say it's now 12:35 afternoon PM. Let's just say at 1:35, it hasn't gone anywhere. I'd not be very happy. But if it suddenly spikes to 262, 260, 262.50, I'd start to raise my stop on that position that we were just discussing. I'd raise it a point per point at this particular point. If it goes 262.11, I'd make my stop 260.98. You see what I'm doing? That's if you're around. If you aren't around, it's going to be a little difficult. Now, that's on the SPY. What you really want to see, and I'll go to the 120-minute chart. Let me just do that right now. That's going to help me. Yeah, this pattern that we're looking at here, it's gone to a peak B, and it's holding. The MACD is not bad on the 120-minute chart. The S&P is making higher levels, and that's saying, yes, I've got a slightly positive bias on this. It was a little too deep, the slide from today's high of 260. Was that today? 27th. No, today's high is the 28th. Today's high is 261.90. Yeah, that's not bad. Okay. So I'm looking at this and I'm saying it's going to happen within the next hour and a half. I want to see a move of at least a point in the SPY, and the diamonds, I would have a stop in the diamonds. It's trading at 239.45. I would put a stop 236.95. Oh, sorry, that was a mistake. I meant 236. Wow, 3 points from here. I don't like to do that. That's too much for me. Okay, on the SPY, half my position stop would be at 238.20. Give it a little room. And now you say, okay, so that's one half. What happens if it gets taken out and I've still got the other half? I'm going to say to you, if it's weak, over the next 2 hours, that's not a good sign at all. I'm inclined to say at least one of the positions I'd get out completely if they start to weaken over the next 2 hours. But at the same time, if they do start to rally, I'd only go one day at a time. Let's just say at the end of the day, the Dow closes up 163 points and the S&P closes up 10.30.
Mm-hmm.
And tomorrow, the futures are kind of mixed. And then you've got a report if there's a Thursday jobs report because Friday is closed. Let's just imagine that everything's good at the opening. I suspect there will be buying pressure for some part of the day. Then I'm going to say to you, raise your stop. And at the close of the day tomorrow, if it's only up a little bit, I probably would say, John, take off at least a third of your position in both of them. Now, what happens if it gaps down? You're kind of stuck. And that's the reason why I want to see some liftoff from here. So you've at least got a cushion. A 2% loss or 3% loss is a lot better than a 5 or a 7% loss. Why? Because we don't know what's going to happen at the open tomorrow. If the Qs are very weak, it could drag the market down, and the SMHs are not acting all that well. And that's the reason I'm looking to protect you in terms of your positions. So I'm saying, because it didn't do what you would like, cash is much better than looking at a loss. I'd build up that cash position of getting out of a chunk of it and saying, you know what, it didn't work. I'm lucky to have got out with a small percentage loss. I can always get back in. And what happens if you get out and tomorrow it gaps up, Dow's up 200 points, S&P's up 20. You just have to shake your head and say, well, I just had to protect myself. Your money doesn't know that it missed opportunity, but it will know if it's going down. So I'm just trying to protect you. So I hope that helps you in the way I'm looking at it. This pullback is a little deeper than it should have been today.
Okay. All right. Thank you, Basil.
Okay, I'll keep talking about it today and tomorrow in any case. So good luck with the trade.